Hello, and welcome back to Explain the Charts. Today, May 1st, 2025, we're analyzing the Eurusd pair, looking at both the recent news and the chart data to make sense of where this currency pair might be headed. First, let's address the current events. Recent news suggests mixed signals, with the dollar holding a rebound despite recession risks. Some analysts, like those at UBS, project Eurusd could rise to 1.20, while others foresee a breakdown amid waning haven demand, indicating a potentially bearish shift. There is an interesting contrast in views as the European Central Bank has cut interest rates, with the possibility of a euro collapse, versus UBS strategists seeing euro to US dollar exchange rate possibly rising to 1.20. Let's see if the technical data shows some correlation to these news events. Now, let's shift our focus to the chart itself. Looking at the daily chart, we can see the Eurusd pair has experienced considerable volatility over the past few months. It appears the pair has been trading in a broad range between approximately 1.01 and 1.14. We can observe a recent push towards the 1.14 level, which may act as a key resistance point. I am switching to the 1-hour chart for more insight. Let's narrow down the date range to the most recent price action, from April 11th to May 1st of 2025, since the daily chart is too zoomed out. Switching to the 1-hour chart, it allows us to see more granular detail. We can see how the price action has been choppy with no clear trend. There appears to be some support around the 1.13 level in this time frame, but it is a weak form of support and could easily break. The most recent candles on the 1-hour show a downtrend, so that is telling us prices may go down. On the other hand, let's take a closer look at the 15-minute chart, again narrowing the date range. Now we're looking at the 15-minute chart for finer details, which shows the intraday moves. We can see that in the last few days, Eurusd has been oscillating around 1.135, struggling to maintain any consistent upward momentum. The recent price action displays a consolidation pattern, suggesting a potential breakout in either direction. If we look at the most recent price action on the 15-minute, it appears prices are in a downtrend, reinforcing the idea that prices may head lower. So, what's the likely scenario? Given the recent consolidation and the overall range-bound trading on the daily chart, a breakout from this range is probable. If it breaks below 1.13, we could see a move down towards the 1.10 to 1.11 range, approximately where some analysts predict it will go. Conversely, if it can convincingly break above 1.14, a retest of higher levels around 1.15 or even 1.16 becomes possible. Monitor Friday's U.S. non-farm payrolls report and Eurozone inflation data as key events to watch for volatility. Thanks for watching and happy trading!